Hey guys, this is the Trading for Dummies series brought to you by Mastermind Trading. Introduction. If you followed our previous video on market structure up until this point, one thing you will notice for sure is that every trend is defined by impulse and then correction, which is the strong move in the direction of the trend, and then a smaller pullback, retracement, before the continuation of that trend. Now in this video, we want to look at a very important tool, which is called the Fibonacci Retracement tool or Fibonacci Retracement level. And the Fibonacci Retracement tool basically is a tool that is used to project to what extent a pullback is likely going to drop to us before the trend will continue. So traders use this particular tool. Let's say in an uptrend, traders want to buy higher lows. So in an uptrend, traders will want to look at Fibonacci tool to look for good levels to buy pullbacks, like in this case. While in a downtrend, traders will be looking for good levels on the Fibonacci tool to sell. In an uptrend, traders will look to draw the Fibonacci tool by extending from the swing low to the swing high of the trend, and then watching for price to pull back into these mathematical levels on the Fibonacci tool for them to buy in continuation of the uptrend. While in a downtrend, traders will extend the Fibonacci tool from the lower high of the trend to the lower low of the trend, and then waiting for price to pull back in formation of a new lower high to continue the trend. Now the key takeaway from the Fibonacci tool is traders want to see price drop to this levels on the Fibonacci tool. These are mathematical levels, and they are levels of expected possible reversal for the trend to kind of like continue. As you can see from this illustration, price is in a clear downtrend, forming lower highs and lower lows, and then the Fibonacci tool is extended from the previous lower high of the trend to the previous lower low of the trend. And then the target for this person whatsoever was to sell significant level of this Fibonacci tool. Now you can see price beginning to pull back, reacting off the 61.8% levels on the Fibonacci tool, and then continuing in the direction of the downtrend. There are different ways that traders look to incorporate the Fibonacci retracement tool into their trading. Let's look at some of those. Now, this illustration shows three key levels on the Fibonacci tool and how traders interpret the information when price reacts off this level. Now, the first from the left hand side is the 0.78% on the Fibonacci tool, and usually traders would interpret information on this price level as a weak trend. So let's say we are in an uptrend and then price begins to pull back. It breaks through the 0.32, breaks through 0.5, breaks through 0.61, and then go in for the 0.78. Now, usually it will mean that this is a weak trend because the opposing trend is pushing price in strongly in the opposing direction. While on the other hand, we have the 0.61 Fibonacci level, which is usually considered as the golden level when it comes to trading Fibonacci level. For most Fibonacci traders, this is where they want to place the most of their trade. Now, lastly, we have 0.51 on the Fibonacci tool, which basically confirms a stronger trend than you are going to get in the 0.78 and then 0.61. So basically, these are three key levels that traders look at when they consider the Fibonacci tool, and this is how they interpret information based off price reaction from these levels. In this illustration, you can see price moving in the direction of a clear uptrend and then beginning to pull back. And then the Fibonacci tool was extended from point A to point B on the second image right here. And then you can see price dropping right to the, I think this is 0.61 or 0.5% level on the Fibonacci tool. And then almost immediately bouncing off that level in continuation of the trend. Now in this case, you can see Fibonacci tool being confluenced with demand zone. Same thing here, being confluenced with order block. And so basically the Fibonacci tool on its own is not a strategy, it's a tool that can be incorporated into your trading system to sort of maximize the results you get. I remain Monaco Daniel, the mastermind trader from the world's most populous Black nation. I'll catch you all in the next video.